Good morning, happy Friday, everyone. Good to see you, Patrick. How are you?
Yeah, happy Friday. Yeah, I'm good. I'm pissed. Everything is fine, so I'm good. It's weekend, so let's go.
Yeah, let's go. So this session today, guys, and then of course we're gonna follow up next week. We wanna do this session, which is called Trade the Data, Not the Feed, and the goal is really to help you. Can you guys hear me? We're gonna spend a couple of minutes going through why and how finance has changed over the past few years, and why, as a trader, you should be paying attention to what's happening and how you can adapt your strategy. So first of all, with AI, with alternative data, with quantitative firms, finance has changed, and now everything is driven by data. It's driven by algorithms, it's driven by flow. So using a strategy that worked in the past not necessarily will work in the future. So you need to be able to adapt your strategy and adopt the tools that are available for you. So if we go into, we're going to show this chart again, and I know you guys have seen it before, but essentially, why is option data important, and why are we going to talk about gamma levels in a second? Basically, option flow is now driving liquidity. So whether you're trading futures, stocks, ETFs, indices, it doesn't really matter, because the option volume behind it is really determining the price movement that you see and the volatility that you see in the asset. We also took some stats, and I want to share a couple of insights here. So first, in February, we had record-breaking volume of options. So we've seen how the trend has evolved from the past 20 years. In February, we've seen 4.8 million contracts in a single day were traded, which is basically much higher than the daily average in 2024. Zero DTEs options are becoming key, and they account for about 56% of the S&P option activity in February. So there was a lot of activity in February, of course, due to the macro events and the news. But basically, this is important to know, because those options are driving the flow. And then, of course, retail participation, right? So the majority, or like a big percentage of option activity, is done by retail investors. So of course, retail investors that might not have access to the tools the institution have access to, so they might be at a disadvantage. So knowing how to read the data is very, very important. With that said, Patrick, I'm going to pass to you to go into the charts and show basically how we can interpret those levels and how we can leverage for our advantage. I don't think I can hear you, Patrick. No, we can't hear you. No. No, we can't hear you, Patrick. Okay, while Patrick comes back, let's go into and look at the data from yesterday. So these are the levels on futures for yesterday. So not from today. We just want to show you how the market behaved yesterday. So we have our primary levels here. This was the price action from Thursday, April 24th, right? And as we can see, we have our high vol level here, which is, of course, our gamma flip point for zero DTEs options, right? So this became very, very sticky level throughout the session, from the previous session, all the way throughout the day. Was a reaction zone. We went all the way to the next box right here, which is our core resistance, zero DTEs, so option expiring on the same day. We broke through that, and then we also went all the way to the one-day max, and we broke through that level as well. So I think what this shows is really how key these levels are, and how can you use them to not only determine when to get into a trade, but when to get into the next trade, which it could be an exit point, could be adding to your positions, or it could also be basically managing your risk. So stop loss, take profit target. Okay, let's see. Can you hear us, Patrick?
Yeah, I can hear you good. You can hear me too?
Yeah.
Okay, so I'm connected now on the mobile phone, so sorry for this.
No worries. Difficulties.
Okay, so first things first. So if we're looking to the charts, and if you're using, for example, the MenthorQ gamma levels, I would say use this as simple as possible. Approach this as simple as possible. First, think about support and resistance. Think about supply and demand. And second, understand what the levels really are. So I would say let's go to step one, to basically supply, demand, support, and resistance. I have from my side only the primary levels for the NQ, and you can see this really, really good. And I will map this out for you again. So we can connect one-day max and call resistance. We can connect high vol 0 DTE and high vol, and also there's the one-day min. And we can connect the put support. We have also here and call resistance. So I would also connecting this and then taking out the indicator. And you can see basically it's supply and demand, but based on options data. Why is this so important? Because options driving the market. This is what Fabio was showing us before on the slides. And we're making now an really good decision, because based on the gamma levels, we can make our supply and demand areas. And that's basically how you can use the gamma levels without the meaning behind. Everyone knows when he comes to trading, support and resistance, supply and demand. This is one of the first things what you learn in trading, correct, Fabio?
Yeah, exactly.
And I think this is how you can approach this. And if you are making now the gamma levels on, so then you can think about, okay, what is call resistance 0 DTE meaning? What is gamma was 0 DTE meaning? Why we have here a reflection point? That's a good question. But I would tell you, if you want to find out what is the call resistance, what is the gamma was 0 DTE, go into our academy. We have a really good course about how we teaching you to read and understand call resistance, how to read and understand one-day max, how to read and understand high vol 0 DTE. But this is basically what you can do, and you can use this. So that's really simple and basic stuff. And also we have other tools. We have not only the gamma levels from you. So we can now add also as second confirmation our MenthorQ swing trading levels. We have this now already, so it's automatically updated for you also on TradingView. I think, Fabio, it must be available for everyone, correct?
Yeah, correct.
So what I'm doing basically is, for my trading roadmap, I will now making only the areas what are really interesting for me, what is in the play. I will map this out, what is also in my map from the gamma levels. So, and then I'm take out now the swing levels. So basically now I have my swing trading levels, what is in the play. And I have now, okay, I know the green ones are the gamma levels where I was connecting. The blue ones are the swing trading levels. And now let's see if we have also some blind spots areas where we can work with, whereas maybe not in our area. So what's not in our area is this area booth. So I make this now in a different color so that we can know, okay, what is this? So here we have our blind spots area. I will not map this out because we was already mapping this out. Also this area, I will not map this out. And basically that's my trading roadmap, what I was teaching all the time in the summer, how to build this and how you can use the MenthorQ gamma levels, the swing trading levels, and the blind spots in a really easy manner to understand how they're reacting. Let me know, Fabio, if this makes really sense.
Yeah. How do you then act when you have the roadmap? So like...
Yeah, that's a really good question. That's a really good question, and I love the question. So what is really important for me is I'm working with the Fibonacci tool, and we was talking about the pin risk, correct, Fabio?
Yep.
And I think that's exactly the same for our trading roadmap. And I was really looking so long time into this, how we can approach the concept trading from box to box, trading from level to level. All right, so what I was doing basically, here you have my FIB retracement data, what I was using. So the green ones, 0.136, 0.236, and the red one 0.886 and 0.786. So basically what I'm doing, if I want to be shorting the market, if I want short from box here to box here, I wait until we breaking through the red lines. I will not getting involved in the market before here. So this is something where I can make yellow. And this is also something what I can make yellow. So then I will take out the Fibonacci, and I know, okay, if I fall down from here, I can short. If we bounce here from here, then I can go long. So that's basically what I'm doing, Fabio. This is how I'm approaching this. Really simple and easy. And this is also how I'm approaching when you should be going into the market, when we say, we have this really often. Let's take this out because it's recorded. You can see it. It's so simple. I remove now the drawings, or I can make a screenshot for you if you want. Here we go. Then I will post this later. And now let's take out the drawings, remove the drawings. And we get very often the question, Fabio, hey, when we can go into the market when we are approaching some level. So you see, we are approaching core resistance, UDTE, and now we are on the core resistance. And people asking me also in the pro room, hey, Patrick, when we can go into the market on the core resistance? I was teaching you on Monday for 2 weeks when we was live in the premium for a live trading session, live trading commentary. There's a pin risk. It's about 20 points above and 20 points below. Maybe Fabio, you can really short term explain to people what is the pin risk.
Yeah, I mean, when you look at pin risk, it means that market making activity around those basically causes the price to move kind of like sidelines around that level. So it tries to break it, but then returns to that level, and then basically you see that price action. Like, for example, if you look at the left side of your chart at around 12, you see like how that activity around the core resistance was kind of like up and down that level. So there was a pin risk, a pin effect of that level over there. Yeah, on that area.
Yeah, so let's map this out. That's the pin risk area. And I was also thinking, because I love to use the Fibonacci tool. You can play around with this, so nice. And I was also really thinking about this, okay, how we can make this possible to say, how you can measure the pin risk. So we can basically say, you can use the ATR range. So some people who I know who are really successful with MenthorQ, using ATR range. So if we are approaching, for example, now the core resistance, they looking to the 5-minute ATR, and they know, okay, if the ATR is like 30 points, then I should wait 30 points. But for me, we came now back to the Fibonacci tool. Let's go into this. I have a template on my side only for the pin risk. So here we go. I changed it a little bit. Here's are my settings. You can copy this if you want. It's later in the... and now we come here to the core resistance. So basically what I'm doing, I connect the Fibonacci's levels, what I'm name it, from level to level. And here we have exactly my pin risk area. So for the top, this will be here and here. And if I would go long, it would be here and it would be here. Now I'm taking out my Fibonacci basically. And if I want to be shorting the core resistance, what we have now, I would wait until we going down from this box. If I want to be go long, I won't be wait until we go getting out from this box. So that's basically how I would be approaching this. If I want to be go long or short, I know exactly this trading area here is a no-go area. So this is something where I won't be not getting involved. So basically this area here is my no trading area. This is my pin risk area where I get shopped out. So basically if I want to go short, my short would be going from here. If I want to go long again, I want to go here. If I want long from here, I want to go long here, or I want to be short here. So that's how I'm approaching this. So, but everyone is completely different. Someone is using 20 points, 25 points, 30 points as usual. Someone using ATR. I'm using my Fibonacci tool, and this is how I can work with this. So really simple and easy to approach. Let me know if you have questions.
No, very clear, Patrick. Yeah, very, very clear.
And you know, I get always the question, hey, how we should approach the levels. And I was always thinking, okay, I can only speak for the NQ, use 25 points, 30 points difference, top to the bottom. But then I was really thinking about, okay, how we can use this maybe with the Fibonacci tool, because if we now going into, let's say we go to GZ, some people liking gold. I personally never trading gold. I'm only buying gold as long-term investor, but it's real gold. Yeah, so that's it. I never trading gold. So how we can approach this now? So when we can go long, when we can go short, we have here the put support and put support 0DT. How we can approach this? That's why I have the same principle. So I'm using my Fibonacci tool. Here I will, if I would be shorting the market, here we go. Where's my drawing box? Here's my rectangle. So basically this will be my short area. Take out the levels, take out the Fibonacci, take on the levels. So if I would be shorting the put support, this area here would be my short entry. Here I will, if I going below the box, I will be short, short, short. And you can see this, how nice this be rocking, Fabio, yeah? It's perfect. Yeah. It's matched perfect. This would be my short area. I will not shorting the market or shorting gold before, here we go, where we have our tool, here we go. I will not thinking about a short before we're not getting out of the box and we are not getting here. So this will be my no short area. If I like the short, yes. And people say, okay, Fabio, what is the 1-day min? What is the 1-day max? Maybe you want going long on the 1-day min, but first, really in short term, Fabio, what is the 1-day min and the 1-day max? Because this is something what you should absolutely know.
Yeah, so the 1-day max and the 1-day minimum is an indicator that we have developed to predict forward-looking volatility for the next day. So essentially, we are trying to predict where the price should be and what the minimum for the day would be and the maximum for the day would be. And the goal is really to predict the fact that the price could stay above the 1-day minimum and below the 1-day maximum. And the way you use that would be for reversal trade. So if the price approach the 1-day minimum and there is a high level of confidence that the price would close above the 1-day minimum, that could become a nice entry area. Take profit target or stop loss target, right? Same goes to the 1-day max. So if you are in a long trade and the trade approaches the 1-day max, you know that there's a a statistical analysis behind that could tell you that the price could close below that. So you could use that level as your exit area, or if you want to do a reverse trade, you could actually use that level for a reverse trade maybe.
Yeah, correctly. And if I would be now maybe going long on the 1-day min, so I would use the same principle. So that's why I was thinking about how we can approach this with the Fibonacci tool. I would be connecting from 1-day min to the put support. Basically, I'm using always the same principle. And then my long area from the 1-day min is basically really simple and easy. This area here, or if I want to be taking a little bit lower than here. So take it out. If I want to go long on the 1-day min, that will be my area. Boom. I want to see the retest. Here we get it. Boom. Here I want to go long. Or if we fall in truth the 1-day min, and I want also trading the 1-day min as level, I want to be going long here. So that's my approach, how I would be using this. We can use this also the same principle from the 1-day max when we're getting the short. So where was possibility the best entry for the short side? We can use the same principle, taking out the Fibonacci now. So my best short entry will be below the box. Boom. And you can see it. Perfect. So basically, this is how I'm approaching the pin risk factor and not getting involved to enter directly on the levels. Enter a little bit below or a little bit above, but have a concept how you can approach this. So basically, I'm approaching this with the Fibonacci tool. And this is how I would be shorting the market. And here I want getting the reservoir to the upside. Really simple. And now we have also our levels here. Call resistance, high vol UDT, put support. Amazing. It's a nice opportunity, champs. Here we go. Take out the levels and you have your roadmap. Boom. So simple and easy. That's what we can do with the levels. Man, I don't know. I'm not a gold trader, but that's a beautiful roadmap. Bobby, what you will say?
Yeah, no, it's I like it. It's very. I think the idea behind it is that the concept is very simple behind it, but you do have the power of data. So those levels are actually institutional levels. So they're not just levels of support and resistance drawn on a chart. They are levels that carry the power of option flow, as we saw in the previous slide, where option flow are now dictating where the market will go, basically.
Yeah, 100%. And without the levels, without the institutional grade levels from the options market, how I should know what I should be using for my Fibonacci tool? I have no idea where I should be entering with my Fibonacci tool, but it's become so much easier, and that's something what I really like. And we can do this with everything. We can do, I don't know, should we go in the next one? We can go in crude oil. Can we replay this again? Yeah. And that's all right. Go ahead.
And maybe Patrick, we can also do the forex future. I think there's a question on the dollar index, so we can go maybe on 6E or one of the forex currencies.
6EM, correct?
Yeah, correct.
All right, let's go. I'm not a forex trader. No, 6EM. No, it's not. Let's see if we have the level. Oh, no, now we have the levels. All right. Okay, so you want now using the put support, for example, because put support is now looks very nice, correctly? So I would using the same. So how we can approach this? So first, let's build our trading roadmap. So what we have. So we have here our 1-day max and the put support. And we have the put support and the 1-day min here. It's not looking so nice and sexy. Why? Because I'm using very often only the primary levels. And I would say to have a really good roadmap on 6E, because I'm not a forex trader, there's no problem. So you can have here the option to can say, okay, I want also see the gags 1 to 5 levels. All right, let's plot it, and then we have a much better opportunity. So we can connect gags 3 to gags 4. We have our 1-day max and put support to USDT, and then also same principle. We have our gags 2 and gags 1, and our put support here in the middle. So, but basically, this is how I would be drawing my trading roadmap only for today. Let's take out the levels. Boom. Here we go. But there's also something what I can give you as inside information, because I get the question in the pro trading room. I think it was yesterday or the day before. I don't know. But let's talk about this. So someone was asking me, hey Patrick, I'm using also 6E and Swiss franc, but what can I use also as second confirmation? What can I also plot? And I would tell you, if you're trading Euro Forex futures, and I have no idea why, I don't know, but what very often works, if you're using the gold futures, so GSM 2025, and you can convert this to 6E, this works also very often, very nice. And then look only to the primary levels and make this show the converted levels. Here we go. Where are my good levels? Show converted levels only. No, and from. Here we go. Now I have my good levels here. And now the picture looks a little bit different. So where I see the gold levels, you see it here, high vol USDT, GSM 2025. So what I'm seeing now is like I see this area here, and then I have a box here. Here we go. Now I can connect a little bit more. Boom, take out. This is what I would be now focused on the day trading, if I would be trading intraday, because I was adding also now the gold levels, and gold and euro works like a charm. It works perfect. And then you can connect the levels together and you get a really nice trading roadmap. As you can see, this is something how I would be using this as a day trader, as a scalper, or what I was doing before on NQ and on gold. How we can approach this with the pin risk factor. I never trading 6E, and I have no idea if the same principle is also valid on 6E, but we can test this. So if I would be now trading the put support, I would be approaching the same principle. I want to connect with my Fibonacci tool, put support and 1-day min. And if I would be going short here, I would be short from here, or I would be short from here. So let's say we want short the put support. That's what I would be thinking about at the moment, shorting the put support. I don't know if this is right or not. We can also use this for the long position. And again, it's no financial advice. It's only now for education, how you could approach this. So if I want to be short the put support, this would be now my opportunity to short the put support, or wait until we're going through the put support and short from here to the 1-day min. If I want to go long on the put support, wait until we above the box, or if we touching this box and then take the reserve from the box here and take it in the middle. This is what I'm talking about, the pin risk. And again, I'm not a futures trader. Sorry, I'm a futures trader, but not a forex trader. But in the middle between this one, I will not getting involved in this. I won't wait until we getting in the box and shorting from here, and that's it. I hope this makes sense, but really, I'm not a forex trader. I'm only in futures traders. Mostly 99% of the time, I'm trading NQ or QQQ. All right. I think it's enough for today. It's only a little tiny session to get an idea, guys, how you can use it. If you want to learn more, come in our community. Go in our pro room. We can talk about this in the pro live sessions. We are every day live, so we can go into this in really detail. And yeah, so if you want to learn this, how this be working, I'm absolutely free to teach you everything. And the next session, I think, Fabio, Trade the Data, Not Defeat, will be scheduled for the 5th. When is the next one?
So we're going to have one on Wednesday, and I think we're going to be live back on Monday, I think, Patrick. But I think the interesting part is that so on Wednesday and Friday with Patrick, but we're also going to have some really interesting sessions with Dan, actually in 1 hour. We're going to talk about risk management for options, and we're going to focus next week on risk, because I think the problem is that this volatility can bring a lot of opportunities, but it can also be very, so we want to make sure we cover the risk management part. So we're going to talk about risk management for options in about an hour. We're going to talk about risk management with Tim on Monday, and then we're also going to talk about risk management when trading futures next week, Patrick. And then, of course, we have a session with Ryan of volatility. Of next week is really volatility and risk. So stay tuned. And of course, if you guys want to join us, come to our community, and we'll have more. And there's also a lot of materials in the academy as well.
Yeah, and when I can say something about this, champs, take the time. So, as I said, I was trying in the past 3 times to understand options data, and I'm now involved in options data and how I can use this for my trading approach since few years. But it was in the beginning, it was so hard for me to understand everything. But with the MenthorQ Academy, I can really tell you something. You get everything. But in Germany, we say, don't eat the cow, eat the steak. So don't try to go over all courses, over all videos. Understand maybe first, what is the call resistance? What is one-day max? What is one-day min? Forget the mathematics behind or the technical behind. Understand first, okay, what are the levels telling me? And then if you understand this principle, then you can go much deeper in the technology and in everything what's based on options. I'm speaking only from futures trader to futures trader. Options trading, it's completely different. I'm understanding this. But this is how I would be approaching this. If you be new, and if I would be starting from the beginning, I would tell you, start really with the basics, understand one thing first, and then go to the next one. Make not the mistakes and say, write Fabio and message or me and message, hey, I was watching all your videos, but I don't understand this. How you can go through all the videos in the full weekend, I will also not understand this. If I would be eat the full cow, I would be sick. But if I would be eat every day some little tiny steak, I would feel happy. So understand, yes. Going from one little lesson to the next lesson the next day, make the notes, and then see if you can see something on your chart, observe, and then build your own technology. How I would be approaching pin risk. You were seeing how I'm personally approach pin risk. I'm using the Fibonacci tool, other ones using the ATR, other one using a fixed number because they're trading always the same. So, and then you can work with this, and then you can become really successful. And the next thing, and I think this would be, I think the last one for today, what I can tell you also is, if you have a trading system, maybe you use order flow, you use, I don't know, ASR, you use SMA, or you use, I don't know, whatever. but you have a trading system and you're really good in reading your trading system. I fully understand this. But there's an opportunity for you with a second confirmation. And this is how MentorQ can really help you to become a better trader with your trading style, with your trading approach. Because the gamma levels, the swing trading levels, the blind spots, the models, what we have, and also Fabio will be maybe going through the dashboard and telling you about the seasonality. That's really, really important to understand this. And this is something what you can use as second confirmation based on your trading style. And this is also what I'm using. I'm using MentorQ for myself as second confirmation. Is my experience, what I'm seeing based on the market, confirming from the options level? Is this confirming based on data? And that's the really cool thing, how MentorQ will be helping you out. All right, Fabio, I pass this now to you.
No, thank you, Patrick. And I think we're going to be on our live trading session soon. So thank you guys for watching. The market is about to open. So for those who know more about us, just follow us through our website, our social. Again, we're going to be live back in an hour. And then we're going to also be live back next week with a lot of different sessions. And of course, send us an email if you have any questions. But thank you, Patrick, and good luck for your training today.
Yeah, I will be going now with the pro community. We will trade now live trading for 1 hour. We're starting in 20 minutes. And of course, I'm 100% sure it will be not 1 hour, maybe it will be 2 hours. But yeah, like this. So if you want also trade with us, if you want to be with like-minded people, join us in the pro community. We will be more than happy to help you out. And I can tell you something. Maybe give me 1 minute again, Fabio. Always the last word. Sorry for that, but I give you one example. And yesterday, someone was talking about when take profits, about the stop losses, and this was so cool because we was yesterday and small group, like-minded traders, and it was a so nice discussion about when to take profits, how we should use the stop losses. And everyone have a different view, but at the end, it was so helpful because this was confirming what other people seeing. And this is the goal from a really good trading community who support you, who help you, because we want that everyone becomes stronger as trading, better as trader, and stronger together. That's the goal of MentorQ community, and that's also the approach from the MentorQ program. All right, now I'm done.
Thank you, Patrick. See you guys very soon, and have a great weekend, everybody.
Yeah, bye-bye.